we are the ones kind of making that credit decision, and we are surfacing that to the customer. We believe it's kind of the very first time that a lender is making that process completely transparent.
So to start off, we're going to sort of set the scene and talk a little bit about borrowing power and then the larger context of what's going on in the borrowing space. So with mechanisms such as things like Sesame Credit in China and short-term options available via companies like Branch in Africa, the mobile-first approach to decisioning into borrowing has become quite an important thing over the past few years, and in a number of different geographies as well. So these companies will typically have to overcome a load of issues surrounding the capture of relevant credit indicators and the speed with which these decisions can be made. So it's kind of interesting to offer the UK perspective from your end. What we're going to be able to do is see the development of things like business credit. We've seen companies like Tide partner with people like Iwaka and Asto, the Santander-backed proposition, working to provide things like invoice financing, business credit, that sort of thing. See episodes 9, 11 and 14 to hear from each of these companies about how they're doing it. So go back into the Homescreen archives for those. So I was super happy to get the chance to focus a little bit more on the retail side with you guys here, to see kind of what's going on with one of the really early innovators in the digital finance space. So with that, welcome Didier Baclin, Chief Product Officer from Zopa. Thank you very much for coming on Homescreen.
Thanks for having me today.
Great. So we're going to start off with a few introductory, sort of more general questions, and then that's going to help us to set the scene for a bit of an introduction to the borrowing power feature, which you've just launched. So can we start off very basic, very top level? What is Zopa?
Yeah, so Zopa kind of started the whole peer-to-peer lending trend now nearly 15 years ago, I would say. Afterwards, we obviously have seen that develop throughout the world, right? Whether that's in China, the US, Africa, really that became a global phenomenon, and obviously Giles was a big part of that. So, so initially Zopa started at this as this marketplace where people who had money could invest it in people who wanted to borrow money, whether that was for a car or to renovate their kitchen. And it all started with the vision from the founders to really give better value to both sides of that marketplace. Because again, when you think back at the time, savers really had very, very low rates of interest on their current accounts. And on the other side, borrowers were not always getting the best rate from their banks. So that's how it all started. And Zopa was kind of the inception of that marketplace lending concept. More recently, we've also managed to get ourselves a new bank license, actually. These have been quite popular in the last few years in the UK. And as part of that, we are going to launch our savings products and credit cards next year. So today, Zopa offers unsecured personal loans, secured car finance as well. We've been doing that for a couple of years now as well. Obviously, peer-to-peer investment, and then going forwards, savings and credit cards. We've also just launched the savings in beta to some of our existing investors, and we've launched also the borrowing power, as you've mentioned, to the general public just a few weeks ago.
And we're going to be taking a little bit more of a look at that during the course of this show. But it seems like you've got your tentacles spread quite widely now with that banking license. So, but a bit more specifically about you, Didier. What do you do at Zopa, and how did you get here to where you currently are?
Yeah, so today I'm the Chief Product Officer at Zopa. I've been at Zopa for nearly 6 years now. I actually started as the Chief Data Scientist, then went on to take various roles within the company. So today I look after some of the new products that we've launched recently, like secured car finance, but also historically looked at the build of all new products, so savings, credit cards, borrowing power. So whenever there's something new to build from scratch, that's kind of where I come in most of the time.
That's really fun.
And in terms of my previous experiences, so I worked at places like Amazon, BSkyB for a few years. So my background is from a computer science and applied statistics background, so very much a geek from the very beginning. And afterwards, in the last few years, I've been more onto the kind of product side.
Yeah. So we tend to, when we get these product managers coming onto the show, I'll ask the question, what sort of product manager are you? And then we'll get one of two questions, one being I understand the sort of the design or the business side of things, or I understand the computer science side of things. What are the kind of things that you value as a product manager yourself, and what do you look for in other people? And how do you populate your teams with those sort of people?
Well, so I think you're right. I mean, obviously, when you look into the market, people might often come either from a more business type of background, maybe working in regulated industries before, like a bank, for instance. Or other times you have people that come more from, let's say, the truer product angle, and they might have worked at, I don't know, places like Deliveroo or Amazon, etc., where there would have been slightly less regulation, for instance, but still where customer experience would have been incredibly important. So to answer your question about what we look for in people, I think for me there's a few things, but the first one I would say is curiosity, right? I mean, I really like people who want to make a difference in the financial services space, and are really curious about understanding what are the customer pain points and what is it that we as a firm, maybe together with partners as well, what is it that we can do to help those customers. So when we think about how we hire the teams, I would say for me it's also looking at diversity in terms of experiences. So we would have people that come from actually design background. They were designers in the earlier phases of their careers, but now they've been more onto the product track. Other times that might be people who are starting their journeys more on the tech side, actually leading more traditional software projects, maybe at places like Accenture, 5 or 10 years ago. So yeah, for me it's about being inclusive of those different tracks. And for me, for as long as you have people with the right mindset that is really thinking about what are the customer pain points out there and how can we solve that, how can we solve those problems in a creative fashion, then I'm very willing to entertain people coming from anywhere really. And I think different people have very different perspectives, which are always going to be very interesting and insightful, as we build the next generation of products.
Yeah, I guess so, especially when you don't really know what sort of things you're going to be building, what with the changing nature of your business and the changing nature of your regulatory environments. But what would a typical product and design team look like at Zopa now, for example? How is it made up?
Yeah, so typically we think about the kind of team of 3, I would say, and so that would be a product manager, and we've described some of their qualities. Next to that, you would have a product designer that would look both at the UI and the UX, actually. And finally, a software team, I would say. I mean, obviously, the tech lead within the team would probably be the person that would be most involved, but when we think about idea generation, creating prototypes, etc., we'll look at these 3 people together to be the ones forming the ideas, understand the feasibility of it, understand whether that's valuable for customers. That's how we would work. So in the product team, you would have probably around 7-8 people in total within a small product team, and of that you would have half of them would be software developers, whether back-end and front-end, and afterwards you would have product managers, a product manager, product designer, potentially a data scientist as well, depending on the nature of the problem. So it's a very diverse group of people. We follow a very cross-functional approach. I mean, the likes of Spotify, etc., have kind of led the way there, but we are very, very fond of that, because in the end that means that every person can contribute their ideas, just like as a customer as well. In the end, we are all customers, user of different products. We should have a voice when we are building products. And that's one of the things that always amazes me, actually. In the software developers, you have people that are often very keen as well to contribute ideas. It shouldn't only come from the product manager or product designers. Oftentimes software developers, because they are often quite early adopters, right? When you think about some of the new products, free trade, Monzo, etc., often it was kind of software developers flocking to these guys in the early days. I mean, obviously afterwards they expanded their reach, but I think software developers are very good to kind of keep a pulse on the market about who are the newcomers out there, and maybe some of the features you want to think, oh, that's an interesting one. Not necessarily copy, but try and understand why are they doing what they are doing.
And they're usually a bit more, I found anyway, a little bit more forgiving as well. There's
True.
this book which is, I think it's called Crossing the Chasm. I don't know if you're familiar with it. It's about sort of how you would scale from sort of your early adopter through to mass market. And you've got, they identify this bridge between your earliest adopter, who is typically, like you mentioned, these people who will be super forgiving and will be super enthusiastic about the product. And then the big challenge is finding a way to get up, to ramp up to a sort of the next level of market. But yeah, I agree, like software developers will usually be the people championing the products, you know, maybe on forums or that sort of thing, which is super interesting, but then can help you actually get to the next stage by providing really super valuable feedback. On this note, and I'm interested to get you, your opinion as a data person, but so at the minute I'm building a greenfield proposition, and so a lot of what I'm doing relies a lot on usability testing.
Yes.
As we have a very small batch of users right now, and then we'll be looking to ramp up that. But at the minute we're finding a lot of value in really high you know, high detail sort of qualitative feedback.
Yes.
At what stage do you, as an individual, start to lean on your sort of more traditional data gathering methods, and when do you go for your qualitative methods?
Yeah, so obviously, the earlier you're in the product journey, the more you have to rely, I would say, on the qualitative side, because you don't have much data set that you can really go around. So I would say at that early stage there is not much that you can do. But one thing which strikes me again and again is, and we've seen this with Borrowing Power as well recently, as obviously we've launched more fully to the general public, but we had a beta phase as well. And it's one of those, as you start to see usage, the data patterns and how people use it, you start to see, we had test all of that in the user sessions, but you start to see people actually spending times on screens that we had not necessarily anticipated that they would spend as much time on this, and we thought that they would spend time on that. So I think it's one of those where always taking the data that you get through some of the prototyping phase, you know, with kind of a pinch of salt, because you kind of know that as and when it's like more in the hands of people day to day, how they're going to use it might be somewhat different. And so I think from a product manager standpoint, for me it's always kind of never falling in love with the idea, but really be focused about what are the outcomes that I want to drive, right? And be very happy to say, you know what, that's what I thought, but it turns out that that's actually not the reality. I mean, obviously, creating high fidelity prototypes, for instance, is very important and can generate you the right amount of qualitative data. But I think it's very important going through that journey knowing that it is very possible that all of the stuff that we've done actually, you know, we'll have to put to aside. And I think that's one thing that people say Amazon, for instance, does very well. In that Jeff Bezos talks about bets all the time, right? That he wants to do lots of bets in parallel. The more you have this sort of approach where you think, hey, as I go through a certain motion, this is just a small bet that I'm making. Maybe it will pan out, maybe it won't, but I'm not, you know, fussed either way, in a way. For me, it's the most important is the learning process. What is it exactly that we end up with? You know, shouldn't matter all of that much for as long as I reach the customer outcomes that I set for myself. Whether that was helping people save money, help them understand their credit score. In the end, that's what we strive for. How exactly that come about, I think that's part of the journey. And for me, that's what makes products so interesting, because you know where you start and you know what are the outcomes you are striving for, but how you're going to end.
The messy middle bit.
Who knows?
Yeah, I guess so. And so this borrowing power feature, for example, we could talk of as something which you might have as a desired outcome for what you want to achieve with that certain test or bet, as you were. But sort of what demographic would you be aiming for with this sort of thing, and what problem are you really trying to solve?
Yeah, so if I start with the problem, I think as we were going through some of our user sessions, actually on our unsecured personal loan product, we sometimes found that people felt, you know, you are giving me this rate, 9.9%, 6.9%, or 49%, whatever the APR may be. And they often felt, well, you know, that's what I get, but how could I do better? Right? I mean, how is that derived? So at times there was a bit of that, hey, that's great, but how can I understand how I improve? Right? So I think that's kind of how it started, where people kind of knew about credit score, because if you ask people in the UK, they know what credit scores are.
Yep.
They actually don't always know what their credit score is, right? So, what is your Equifax score? They might probably, I believe it's about the majority of them who do not know.
Yeah.
And then afterwards, what does it really mean, right? They know that higher is better, but by and large, what does that really mean for my cost of credit and things like that? So I think those were some of the problems that we were seeing when we were talking to our own customers, and we felt, yes, there are, credit score products out there that are doing a good job, to give people a first flavor of what their score is in the first place, how is that tracking over time. Sure. But there's not always a direct link, for instance, between the improvement in their credit score with the offers that they can get or the price, etc. So that's really what we wanted to help and create that much stronger direct link between, as my borrowing power increase, I get better access to credit with Zopa, right? That very, very direct connection that makes people probably be, you could argue, even more motivated to make some of the steps towards improving their credit health, because they know that as and when I improve, I can get better.
They want to see a direct correlation
between
their improvement and their outcome, right?
Exactly. And what we saw, for instance, is that on average, an improvement in 1 point of borrowing power can result into something like up to £600 in savings over the life of the loan. So these are really meaningful savings that you can realize by improving your borrowing power. In terms of the demographics, so today our unsecured personal loans actually is around kind of 35 to 40-year-olds. So it's slightly kind of in the middle, I would say, of the UK population. And at times, people might associate us with very, very young customers, but actually a lot of the unsecured personal loan customers we serve would probably be in the kind of slightly older. I mean, I'm just bang on there as well. So, but yeah, I think that's kind of the demographic we serve. Yep. I think in general, when it comes to borrowing power itself, we want to help that demographic, but we also want to help a younger demographic as well, because in the end, it's the steps that you make early in your kind of your life actually can impact your financial life a lot, and you want to make sure that you are doing the right steps even when you are 25, so that by the time you want to, say, get a mortgage or any other financial product, that you're actually in the right kind of credit health shape, so that you can do that more easily. Because again, when talking to people, felt, now I had this deposit that I saved for my mortgage, but actually I realized when I went through the bank application that my credit score was not in check. So now that means I've got to do another 1 year of improvement before I can get.
And it's only at that application stage that they would typically.
Exactly.
The one thing that's just fascinating from my angle is that the difference in sort of the credit ratings that are ascribed to different people, and how you talked there about people not necessarily knowing what their credit rating might be, dependent on if they're going through Equifax or going through another provider like that. Then that in itself is a conflict, because you're thinking, this person says I am, this credit worthy, or another person says I'm not quite as credit worthy. So how would you go about simplifying that process via this product?
Well, I mean, in the end, that's exactly right. Also because different banks might have different views of what a good score is, right? Because they have their own policies as well. So I think that always makes it difficult. It's like, I improved my score, but yet with this bank it's better, with this other bank it's worse. So I think for us it's really, and I think we will go through a bit later, but through that eligibility, what we call eligibility side, where as you improve your score, you understand already, okay, this is where I'm at today, but as I improve, these are the rates that I can unlock, and this is what I can get over time. And obviously today we are just starting with unsecured personal loans, but we'll bring our car finance proposition to this. We'll also bring our credit card to this. So again, where maybe you will start your journey at the lower end of the scale, but you understand, okay, these are the Zopa products I can unlock now, and as I improve, these are the new Zopa products that I can unlock. Or for instance, on the credit card, that means you can get a higher credit limit. On the loan, that means you potentially can borrow more, or you can get a better APR. So it's really because we are the ones kind of making that credit decision and we are surfacing that to the customer, we believe it's kind of the very first time that a lender is making that process completely transparent, right? So when you see the borrowing power, that's the stuff that we use internally to make our credit decision.
Okay.
So that's why there is such a strong link between improvement in your borrowing power to the products that you can unlock at the back of it.
Perfect. So just to very quickly, can we map out the process by which what happens during the borrowing power? So step by step, what needs to happen for you to surface the decision at the end? Kind of what will be going through the back end?
Yeah, so it depends if you are a completely new customer or if you are an existing Zopa customer.
Yeah.
Let's imagine you are an existing Zopa customer, you download the app, you can log in with your existing credentials.
Yeah.
Afterwards, we are asking you to kind of verify that all your information is still correct, your address, etc. Give us your income. Afterwards, we just take a few consents about ability for us to pull your credit profile.
Okay.
And so that goes very, very quickly. And so as soon as you answer these small bits of information that we need and provide the consent, then it hits our backend API. From there, we query the credit bureaus so that we then pull back your credit profile. Yep. And afterwards, we score that to see what product you're eligible for. And we also run that through our simulator that looks at what are some of the actions that you can perform that can improve your score as well.
So this is a simulatory environment.
Exactly,
So
exactly.
They're kind of not predicted outcomes, but sort of like imagined outcomes that a user could go through.
Exactly,
Okay.
exactly.
That's cool. So, and are these purely Zopa products that you would be pulling from, gathering from this data? I know you use a few partners to
Yes.
pull your data. But so, would you be only offering Zopa products, or would there be sort of like a scope to look out for other products?
So at this specific moment of time, we are very focused on Zopa products.
Yeah.
And I would say it's also because for us, given that we are the ones making the credit decision, we can make that very strong link.
Yeah.
The moment where one would go into the more marketplace type approach, which I think is also a valid approach, but the moment where we would do that, then it would be someone else's credit decision on which we would have no oversight, right?
Sure.
And so I think that's where there might be a reduction in the clear link between as I improve, I get better.
Got you.
Right? So these are things that we are thinking about. There might be places where we could engage, but at this specific moment, I think it will be Zopa products related.
Very cool. And so now we're going to actually take a look at it. So we're going to start now. And we're on the first tab of this. You can see in the bottom navigation this new power symbol, which is, and then we're in the overview tab. And then we've got a series of what we're calling powers that are coming in to determine what makes a good credit rating for you. The credit score is presented in this sort of nice dial option. And there's a bit of copy here. Nice bits of information there about what constitutes a credit score and how valuable it is in your overall picture. And then this really lovely area here which shows you how you can do better or what is the available credit. The available credit here, information shown, got nice big bold headings, and then we go back. So loads of like neat little overviews of how you can sort of very contextually make improvements from this overview section alone. We know that we're good for credit usage. Nice little icon there, and then how we can do better. So credit usage, nice kind of language there as well. Quite an important thing for you guys to focus on as well.
Yeah, we have some copyright. We have a copywriting team as well that really helps with those as well.
Yeah, it's important. And then the hard searches part gives us some clarity over what constitutes a hard search. I think that's something that a lot of people worry about, isn't it?
Yes.
So we can sort of determine the color coding on the left-hand side there. We bang on a lot about like things like color theory. So some of our designers will be delighted with that, I'm sure. And then clicking on the how we can do better again, nicely consistent. One of the things I've liked about this is the ability to know exactly what you're going to see on each page from a kind of a component perspective. And so we've had a look through the rating, and then at the top there we've got a kind of an 8 out of 10, sort of quite a the numbers I would expect to see maybe like 8.3 or something like that. I'm not sure why, but it seems to have kept it quite top level, and then we've used the colours there to give us a clear indication of what's good and what's bad. So there we go with the overview. So we saw in there that you're partnered with TransUnion and Equifax to pull that information. What's involved with that? You've touched there on the fact that you'll access this information via API calls, and then you'll send that decisioning back out to your simulated list of responses. Is that information easy for you to pass through into the system?
Well, so I don't know, I mean, how familiar you are with credit bureau data. It's one of those where at times it can be a bit daunting, because oftentimes it's kind of, good old XML files that you have to kind of pass through. But, it kind of works. I mean, at times I wish it was a nice, neat JSON, but, I think at times they've been going at it for a very long while, and obviously they've got lots of mainstream banks that are very familiar with more XML type-based format. And if they were to change, then I think it would maybe ruffle a few feathers. But I think it's one of those where we are always trying to push the credit bureaus actually to give us access to data in a way that's as easy as possible to grab. But yeah, I mean, all in all, I think it's okay, I would say. And afterwards, we've been working with it for quite a while, so we are used to all of the thousands of variables that you can get in there.
Yeah. So used to playing with that numbers. Okay, so in terms of the credit sort of check side of things, you mentioned there the ability to kind of reassure the user that they're not going to get screwed over for doing this sort of thing. But sort of, can you talk a little bit about soft credit checks against hard, what that means to you guys at Zopa, and how you implement sort of the practice around that?
Yeah, no, absolutely. So I think if we think about the outcomes that we are trying to create, first and foremost is we always felt that it's good for customers to compare credit.
Yeah.
It's good for them to look around. It's good for them to kind of always try to look for the best deal.
Yeah.
All in all, people who do that are good customers, right?
Okay.
So that's always what we wanted to encourage, I would say. At the same time, again, when we started way back when, every time you even wanted just to get what is called a quote, so what would be the rate that I would borrow at, most firms would give that, would create what was called a hard search, and that would leave a mark on your credit file that all the lenders would look at to see, oh, actually these people might be hungry for credit because they might be applying to lots of different places. That means I'm going to give them a worse rate. Right, okay. So that's kind of what happened historically. Even still today, some firms, especially for instance in the car finance market, will do these hard searches because they created their technology, 7, 8, 10 years ago when the soft searches were not always widely available. They just kind of kept with it, I would say, because it's difficult for them to evolve some of their more legacy platforms. For us, exactly as you said, we always do a soft search first and foremost, so that you can get a real rate. So if you were to go forward, this is the rate that you would get. But it's only when you are kind of agreeing the direct debit mandate and really signing the contract, that's when we transform effectively that soft search into a hard search. Right? Because when you really apply for credit and you're going to then receive £5,000-10,000, then from a responsible lending standpoint, it is important for us as well to signal to other lenders that now this person has actually been granted credit with us. Okay,
I understand largely how hard search works based on your description there, but can you tell me how does one search softly? So you seem to be doing that or having the mechanisms to be able to do that, but I couldn't tell you how that works, right?
Yeah, so it's in the end it's a slightly different API calls that you are making to the credit bureau, and one where in their own backends they'll put that information into, let's say, a separate place, so that only you as a customer can see your soft searches, because that's important as well. As a customer, you might want to see who is searching you, in a way, right? So you can see the soft search, but other firms cannot, right? So the ability for one to view or not view these this kind of set of data on the bureau side, that's something that the credit bureau manage, so that they know, okay, when I've got this API request coming, then I know that's a soft search and I need to only put the data here so that only the customer themselves can see it, but other lenders cannot access it, so that they are not discriminating against people who would have lots of soft searches.
I was super interested to see the sort of things that people were being requested to do, things like register to vote was one that you wouldn't necessarily think of. So how do you access these tips, and what sort of information are you pulling in order to to feed your database of tips? And it's baffling, almost as baffling as a soft search.
Well, I think it's one of those where, because we have a lot of historical credit data as well, we can see what are some of the steps that people did in the past that resulted in their scores moving in the right direction.
So they're more your interpretation of results rather than actual credit bureau information, is it?
Well, it's at the back of credit bureau information, but in the end we are actually using machine learning to try and find what are the characteristics or some of the actions that people have done in the past that resulted in them improving credit scores over a short amount of time.
Okay.
Right? So this is very data driven, I would say. And some of them might be more obvious than others, but other times as well, we'll also want to kind of let the machine learning algorithms kind of find that in the data itself, so that we can give fresher, nearly pieces of information to people that can help them improve their borrowing power.
Cool. So now we're going to move on to the next tab along, which is the eligibility section. And here is a rate. So this is what we can borrow. And then below there, we've got these series of quite nicely grayed out little other lower rate loans. And then these will be able to kind of be accessed if we up our borrowing power to a certain rate. So we've moved from overview, general performance indicators, that sort of thing, into a section of like, here's what you can get and here's what you could get if you were a good boy or good girl. So what is the sort of the decisioning around surfacing those other loans below that? Is that an entirely sort of predicted thing, or is it sort of, this is an example of a very good loan?
Well, so what we are doing is, thanks to the information that we've pulled from the credit bureau, we then know where you would sit in our kind of credit spectrum, and with that, what is the pricing that you can get now? That's where you see this 9.9%.
Yeah.
And again, that's a guaranteed rate, right? So if you were to proceed all the way through for this loan amount, then you would get this rate, which is at times quite different from other people as well.
Yeah.
But because we can do this, that means we can also pick, okay, if you were 1 point of score above or 2 points, what is the pricing that we would give at that moment of time, right? So we can already know that if you were, instead of being, let's say 8 out of 10, if you are 9 out of 10, given where our pricing is today, we know that we could offer you 6.9%, I think was the example. Yeah. And if you are 10 out of 10, we already know that we would give you 3.9%. So that's the beauty of being the one making the decision and being responsible for kind of both the credit and the pricing, is that we know all of those with very high certainty. Whereas if we were in more marketplace type context, we would either ask the partner to do exactly what we do, or we'd need to infer it or start to make predictions that may turn out not to be as accurate.
And that's not exactly what you want right now.
Exactly.
Okay. But there's also a really lovely behavioral element here as well, in the sense of like you have your available rate, and then, well, let's see below there, this is the aspiring rate, this is the aspiring loan, that sort of thing. Is that informed any of the testing that's been done around it? Do people respond well to this challenge, as it were?
No, absolutely. If we go back to the earlier outcomes that we were talking about, where people felt, hey, I've got this rate, but how can I improve and what could it be? That's exactly the answer that we are trying to provide. Right? We are trying to tell people, this is where you are today and this is what you can get, but as you improve, this is what you could get. Yeah. And that is then a stronger driver for people to see, oh, actually, no, I'm even more motivated to improve my score because I could see, the results that this could lead, and then drive some of the savings that we've talked about, right? I mean, in the example that we were looking at, you had like something like 3% of APR difference. So these are quite important steps, and that means fairly substantial savings for you over the life of the loan.
Exactly. And I also really liked that you were able to very comprehensively, within this very small area of an app, and it's always one of concept, you can see your current outcome, your desired outcome, and the steps with which you can get to that desired outcome, all quite neatly presented in that sort of decision tree, as it were. So it seems as though a tailor-made solution to the loan, the single loan offer that you can give, is a very smart way of being able to package up that credit data and give it to the user. So how would you kind of think a little bit more comprehensively about sort of how you'd apply this to other credit models?
Well,
so things like car loans, that kind of thing.
Yeah, absolutely. We believe that's going to be an interesting challenge, actually, and something that we're already seeing actually in the usage. I mean, we were talking before about how you'd use prototype and then data.
Yeah.
As we are starting to see how people use the app and spend time on certain screens, we are actually already thinking about how do we improve our information architecture, so that, for instance, to your point, today you might say, oh, I see this eligibility. Would it make sense for us to bring some of the actions in there as well, so that it's a bit more visible? You were talking about earlier as well on the overview, where you can click down and see, okay, this is what it means, let's say credit usage, for instance. At times we might say, oh yes, we have all of that great content, but wouldn't it be better if it was accessed, at the time where you could do something about it, for instance? So we are thinking a lot actually about how we improve the information architecture might be a big word, but just kind of trying to present the right information to the right person in a way that's not overwhelming, but in a way that's more contextual, I would say. Because today it's kind of all there, and probably we're always gonna get that or have that somewhere in the background. But maybe at time it would be better to surface it.
Context.
Exactly. It's like, for instance, even personally after a holiday, my credit usage had gone up quite a lot, and that meant my score actually had gone down. And obviously I kind of know about all of these things, but if I'd been a normal customer, would I go through all the steps of clicking everywhere? Maybe it would have been better to say, oh, Didier, your score has dropped from 8 out of 10 to 7 out of 10 because your credit utilization has increased. This is what you should read about credit utilization and how you can get a bit better. So presented a bit more in a contextual fashion. I mean, I really love Spotify with there's some kind of genius thing where at times it brings some history in or the lyrics as part of the song. I mean, I really like that, where it's like, oh, I'm not looking at what this artist was thinking about at that specific moment of time, but I don't know, whenever it plays through the music, I always, oh, that's quite an interesting insight that I have at that time, and I don't have to search for it. It kind of comes to me. So I think that's kind of the next stage for us, is about how we bring the information to the person as and when it's necessary, rather than for them to kind of have to look around. I mean, we've done as good of a job, I believe, as we could through the prototyping, etc. But I think that's kind of where the data is going to be really, really powerful.
And this is the most logical way to surface this information at this stage of the product's life cycle, I would imagine, in terms of you want to start out with the kind of the precise and logical order that you've talked about, and then develop from there and sprawl out. I always remember when we were checking out you can do this sort of like standing order and sort of cash prediction feature within Monzo. So what they'll do is they'll predict when your salary is going to come in and say this is how much money you'll have, and it's grayed out and that sort of thing. And I think that sort of like the ability to be interpreting what's going to happen from that user's perspective is a really cool way of like looking at the problem of how can you give a more complete sort of financial picture of someone's sort of life. But again, this is a cube and an action point, and it's kind of nice to look at the actions. We're going to have a look now at the actions that you've presented in the borrowing power section to see kind of what's available there. Bear with me 1 minute. Here we go. Right, so it's the final tab, and a lovely sort of area where we can see high impact, low impact sort of things that you can change to do a little to improve your borrowing power. Get some more detail. Again, you've leveraged those very intelligent copywriters and making and then the low impact stuff as well. This is what we were talking about a minute ago. Something as simple as registering for the electoral roll. You wouldn't have thought that would have an impact, but here it is plainly for you to be able to surface. And then the other side of the coin, which is how can we avoid certain things? You're not saying do this, but also don't do this. And you're offering a little bit more of a complete picture as to how someone's general habits in life can affect their credit score. So we've seen a version sort of this information in the overview section of the app. What was the aim of kind of surfacing this in a little bit more detail in this tab?
Yeah, so for us it was also about trying to give something quite tailored as well.
Yeah.
So if you are already on the electoral roll, then there's no point telling you again.
Yeah.
Yeah, for us it's about trying to be a bit more tailored, and also trying to make sure that you are being compared to kind of people like you.
Yeah.
You know, just like if you are starting on with your Fitbit, yes, you might want to aspire to be Usain Bolt, but it's going to take a bit of time to get there. And so initially it's probably going to be more like, hey, let's try and do 1,000 steps and then kind of graduate from there.
Yeah.
So for us with the action, it was trying to give those sorts of insights that are relevant to the person, and then over time present different sorts of action as in when they graduate and improve their score over time. But yeah, it's kind of those tidbits of insights that we hope people, a bite-sized insight that people can take, hopefully perform, and then see directly again the link between, okay, this is what these guys gave me as insights. I did that. I can see the improvement of my score, and you start to have this very positive effect that we hope will start to develop with people.
Sure.
There's times where we also want to do interesting things as well. For instance, enabling people who are renting, for instance, in the UK, most often it doesn't count towards their credit.
Yeah.
So, for instance, in the Action tab, we could have a card that would say, connect your data through open banking, and we might partner with someone to do this so that their rent data would be then reported to the credit bureau so that their score would improve. So again, it's that very contextual information. If I see you have a mortgage, there's probably no point doing that because your mortgage repayments are already counting towards your credit score. But if you're not, like a lot of people, actually, what is an action that you could do so that your score would be improved? So I think that's the moment of time where we would want to nearly prompt people to do things that can then correlate well with their improvement in the score.
Yeah, I think there's a few really cool examples of that being done out there in the market. There's an app which I use is called, I think it's called Fabulous or something like that, and you wake up.
I like the name already.
It's very, very cool. And what it does is it just does very simple things like reminds me to drink water on a morning. And that sort of thing, which you wouldn't think of. I get this little bing when I wake up, and then it says drink water, James, don't dehydrate yourself. And then little steps, incremental steps towards, okay, now do this walking thingy. So there's, and it gradually builds you up to that sort of thing. And I think that's a really neat way of what you were talking about there, of kind of building towards the progress that you were seeing. And then what the great thing about what the borrowing power thing does is it actually shows you top level at all points where you are, what your current status is and that sort of thing. And on to your sort of the sort of rental payments side, we've actually seen from a lot, my colleague Sarah has been doing a lot of research into open banking implementation and found that actual rental market sort of innovation is one of the most interesting uses, and probably one of the most, companies like Credit Ladder, for example, making real interesting sort of steps towards improving people's, people's experience and in getting them to make the right decisions. So you've got this very good message here of how we can make high impact and low impact sort of improvements. How did you go about deciding the hierarchy of that information, what information to put on that page and when and why and
Yeah, I mean, so that was largely through qualitative user testing that we did, where we were kind of bringing customers on a weekly basis to the office, sometimes also doing a bit of guerrilla user testing, just in cafes, etc., to try and kind of mix it up. I think tried obviously different variants and see what was best with people, but I think that's the stuff that we are hoping to do a lot more of as we are now launched, where we'll try to do a bit more kind of A/B testing. I would say at times just see, okay, as we swap the order of the screens, as we try and bring information in slightly different fashion, what is the improvements that we get in, whether that's people's NPSs or retention or things of that nature. So that's one of those where I wish I could tell you actually what exactly is that we would want to do, but I think we want to be very data driven and customer driven as we go about it, and as we were discussing before, not try and be too prescriptive, but be very focused on the outcomes and then work with the customer to think about what are different ways that we could go about it put them out there and see how customers really respond. Because it's one of those, obviously when you do the user session, people feel a bit under pressure. At times they might feel like, that's the answer that I should give.
Yeah.
And whenever they're at home, on a Sunday looking at the app, that's kind of where the real behavior comes.
That's where it happens, yeah.
And as much as we would like to do it in the lab, that's kind of the only true way to do it,
You've got a pretty solid product practice put in place at the minute. I guess the main aim for the future is to continue with this fact-checking. Anything else that you're looking for in order to improve about the way that you do product at Zopa?
Well, for me, it's about how we can do that really at scale across all the products that we've mentioned, right? Because we have the secured card finance, credit card, saving, all of those products. How do we enable ourselves to be able to run all of these experiments in a way that can create the right learnings for us, right? So that is both from a technology standpoint, so having the kind of back-end and front-end platform that enables us to do these tests in a way that's good, but also internally, how do we share best practices between the different product teams? You've been very good talking about our copywriting team, for instance. How do we ensure that we have consistency in terms of the way we talk to customers, in terms of the some of the UX patterns as well? Because as we bring more elements to the app, as we make it richer, that's one of those at times I'm always worried about. Are we just going to overwhelm the customer, right? Where you just slap features on top of features, where suddenly it's like you need a GPS just to find your way across the app. So for me, it's about how do we scale the testing platform from a tech standpoint, and how do we scale our product practice across the different product teams so that we learn as much from each other as possible. And the learning that we have from one test, how do we take that on board for another product as well? Because in the end, all customers have often largely the same sort of goals as well.
Okay. And speaking of these customers, this is a question from one of our viewers. Is there anything that you would get metric-wise from the bureau or from another sort of agency of a similar standing that that you would consider overwhelming? So is there anything which you wouldn't include, or maybe I think that's what they're getting at. But is there anything that you would kind of try and simplify, or which you wouldn't include because it's too complicated?
Well, so when you look at some of the credit bureaus out there, some of them are providing apps already that give people their full-blown credit profiles, right? And that's something which we felt, that market is kind of well served today. And if people really want like their full credit profile, they should go to one of those apps. So if anything, when we thought about Borrowing Power, it was a lot about trying to simplify it a lot. Actually, we have hundreds of data points behind the scenes, but we are trying to make them come to life through the kind of 5 factors, for instance, that we've seen, just the high-level credit score, disposable income, etc. So for us,
a little bit.
Absolutely, it's overwhelming actually to see the amount of data that we are getting. And for us, we felt that if people really want like the hardcore, credit profile data, then they can go to the existing apps. I mean, you have the likes of ClearScore or some of the credit bureaus directly. They do a very good job at that. And we felt that market is kind of already taken, not necessarily something. Exactly, and it's one of those where we are very much friends of ClearScore as well. A good partner to us. Cool. But we felt we want to do something that's more tailored to Zopa itself, having that very strong connection between what you do and how you improve to your Zopa product, and that is something we felt was then very unique to us as well, that could then create something different for customers that they had not seen before. And that's why throughout the app in general, our mantra is simplicity, right? Because kind of credit scores, etc., can be a bit of a black box at times, and what we wanted to do is kind of break it open and make it as simple as we could. Yeah,
of course. And I guess that's a pretty terrific rundown of how you run a data-driven product team. So thank you very much for that, Didier. So that's all the time we've got for today. Thanks very much for stopping by. Tune in next week when we'll be speaking to Moneycardo's CEO, Oliver Mitchell, about how they're helping my own generation get into either travel savings, money space, or just general savings spaces. So that should be quite an interesting one. So we talked a little bit today about 11FS Pulse. So head over to pulse.11fs.com to go and see what we're working on over there. And you can request a demo there. If you've got any questions about the product or want to suggest a journey for us to include on the platform or on this show, for example, hit us up at pulse@11fs.com or find us on Twitter @11fspulse. Didier, where can people find out more about you and about Zopa?
On Zopa.com.
On Zopa.com, and you're on Twitter and all that sort of thing, right?
Twitter, LinkedIn, all the channels, yeah.
Great stuff. So thank you very much for coming on. It's great to chat with you, and we'll see you next week. Bye-bye. Homescreen is a show about all things product and design, where we showcase some of the best examples of user experiences from the 11FS Pulse research platform, which includes over 2,500 user journeys from financial service products around the world.